Yeah, welcome everyone this fine morning, all the TechChill early birds. Yeah, I have only 20 minutes, so we got to get really quick. The slides will emerge here. Oh, here we go. Nice. Yeah, so my name is Krišs. Oh, here we go. Yeah, my name is Krišs. I'm CTO of Gravity team. How many of you know what Gravity team is and what we do? Oh, like a half maybe. Yeah, so we are a crypto trading firm. We trade a lot of crypto. We started back in 2017, and yeah, we trade about 1% of the world's trading volume, and it's actually quite a lot. We have traded in total $500 billion worth of volume, which is a pretty big number, coming from three guys operating from Latvia. So yeah, we are three co-founders, me, Edgars, and Martins. Yeah, uh, we are all Latvians and without like technically like banking or finance experience, just three random dudes operating in crypto markets. All right. Yeah. So I will be speaking of how to scale the crypto trading business, but in order to do that, I want to first touch upon what it is, what sort of a beast it is. So it is completely different way how to approach doing business. I have done several startups in my past, and each time you struggle with both the technical implementation and sort of the sales and the business development. Here, when you have the vast ocean of open trading sort of markets, like in these slides, in this chart, you can just see the approximate monthly volumes of this market. On average, it's $1 trillion volume. It's just vast market. Pretty much the only thing you need to do, you need to be like super awesome engineer, just figure out a strategy, just find your edge, find your alpha, and you don't really care like for customers in its normal sense. You don't have to sell anything. It's just you, the open market, put on your hoodie, noise canceling headphones, darken the lights in the room, and just code away. And that sort of mindset blew my mind from my previous unsuccessful experiences with finding customers and cold calling and stuff like that. The other thing, which is different, is just the absolutely vast amount of events. Just the activity is tremendous. We're talking about easily 100,000 events per second, some sort of price changes in like 500 different assets, and we're operating like 40 exchanges. In the peak times, the amount of events, amount of change can be like 1 million changes of some sort per second. That's like extremely quick. It also feels like game, which is really fun because you change something in the code, you deploy it. Because the turnover is so quick, you can observe the change pretty much instantly. You can see that it works or not instantly, and you can feel like you're competing with others. These are bots competing with other bots, and yeah, it's very democratic. Anyone, including three guys from Latvia, can enter it, which means three guys from any country can enter it. So it's very democratic, but also the competition is extreme. And one more thing about it is that it is really ruthless. I mean, yeah, one typo, millions lost. It can happen very easily. Like there are no protections from the government that you send the money to a wrong address. Well, it's gone. It's absolutely totally gone because it's how blockchains work. Yeah, so when you start attacking this beast, the first thing you notice is that everything, because of the sheer amount of events, everything that can go wrong will go wrong. Like there can be like crazy scenarios where you have the balance, you see that, okay, this is how much dollars I have, you're trying to do a trade, it says, no, you don't have that much anymore. And then it says that, okay, I executed your trade. Like what? You just said that I can't execute. Now you say that I did execute. there are all kinds of APIs. Well, Binance and Coinbase and the likes of those are very nice, but we're operating in the 40 exchanges. Latvians are very good at engineering, but then there are those other guys like from Southeast Asia, like Mexico, Brazil, and also from Europe, where APIs are just complete rubbish. But since they generate profit, we have to sort of find our way around it. Sometimes the balance just disappears without any messages. Just we didn't do any trades, it's just gone. And you have to understand that when you start by like entering this field, this business, it's so messy. It's like dirty. Like there are many problems. You think that you are doing great coding and you're trying to be the best coder. Cool, but you have 40 exchanges and there are bugs there as well. So you can't control that. Oh no, I have wrong order. That's why you sort of build the layers of protection over layers of protection. It's like all kinds of like self-healing algorithms, sanity checks, like the price shouldn't move faster than 10% in a minute, for example, which does happen sometimes. And then we consider probably it's a bug in somewhere. We just don't consider that as real. And like all kinds of like tiny little things like how to tame that beast. By that time, I have those little yellow phrases down there. By that time, you are not really ready for the open markets. But if you manage to sort of understand the messiness and tame it, then you can barely stand. And then you get hit by the second train. Like now your bots like work; they don't break. But then it's the question about the profitability of your algorithms. You have $1,000 in your algorithms. Awesome, you're generating 1% a day. Holy moly, that's so much. Imagine if you can just keep on doing 1% a day, like indefinitely. Then you say, okay, let's scale it. Let's flood in more money. Then you flood in more money. You realize that, oh, geez, it's earning like 0.5% a day. Then you scale it to like 100,000. It's not earning anything at all. If you scale it even more, it starts losing money. Well, like, what happened? Then you scale it back down to $1,000. It earns 1% a day again. Like, how does this work? Like, the rules of the game changes depending on how much money you are putting in that game. That's like also very interesting way how to look at it. You think that you have like done a very perfectly smart strategy, but as you scale it, it completely changes. And that makes it very hard. Also, if you have a very good strategy, it's called the alpha decay. So alpha is your secret sauce that nobody has. If you just leave it running because it's earning, it will just decrease in profitability. It will just go down. And that's also one beast that you have to sort of consider. You have to pretty much keep riding, not to fall. And yeah, the first dollar versus last dollar profitability, that is one thing that we measure. And as you start scaling, you notice also interesting problems. Like, for example, in some exchanges, you're becoming so big that you are changing the market. In some places, we're like 20% of the all volume. That's like so big that it is very hard to design your strategies beforehand or backtest them, because the backtest doesn't involve the market's response on your activities. And as you scale, this becomes very observant phenomenon. It's very hard to deal with that. But yeah, that's one thing you have to keep in mind. And also, as more and more sort of strategies go online, then you notice that they are fighting with one another. You don't want your own sort of strategies to fight, because each time they sort of lose money. There are these things like front runnings, like when you place order and somebody places order above you, then you want to place an order above that, each time making the profitability worse. And then you realize that this other party that you're fighting is your own algorithm. And if you don't have like visibility around that, this can happen as you scale. Yeah, yeah, and treasury systems, of course, that's a classic way how to distribute money from places that earn less to places that earn more. Um, oh, I have this. Yeah, yeah, but if you manage to sort of do all this profitability taming, and you can understand the market and understand how to maintain your profitability, then you can sort of survive the bear market, which we have survived two of, and probably we're entering a third one. Yeah. And then you sort of start to become an adult here in the industry. You start to become smarter. You realize that, okay, with very smart architecture, with very smart infrastructure, you can pretty much turn the tides. You can say that instead of strategies competing with one another, let's make them collaborate or make them work together. So you build like some sort of a central trading hub, sort of like internal exchange of sorts, like all the strategies can help each other. You don't execute trades against an exchange. You execute the trades against another strategy. That sort of thinking, and how to put that together, how to sort of do the messaging, how to connect everything. That becomes your infrastructure, and it is yeah, it's very tricky to put that all together and figure out how to do that. And but if you sort of manage to draw that picture and figure it out, then it becomes really hard for any competition to sort of put you down or put you out of business, because you have like this unfair advantage, which is your infrastructure, which is the invisible layer in all those strategies, which you don't trade like in one exchange anymore. You trade in sort of 40 different places. In order, for example, in order to like buy Bitcoin, you just have to change pricing in your internal system that everybody draws pricing from, and they would see that, okay, it looks like the pricing has changed. So in order to be profitable, we have to start buying Bitcoin because the infrastructure will sell it. But if the infrastructure doesn't sell it, then it just means that you now have accumulated the Bitcoin. Instead of going to an exchange and buying something, you just change a parameter and incentivization mechanisms and things like that. So everything here becomes like a very difficult and complex clockwork and machinery. Yeah, over here we have an image of approximately how the internet works in the world. We don't. That's also part of the infrastructure, since we're trading in pretty much all the continents except the only continent you can see in this map, Antarctica. Then we have to also consider which routes to send our messages through. If you have managed to go this far, the world starts to notice you because it's very hard to kill you. But now you enter a different game. You enter the latency game. And this is sort of the beast that we are fighting right now. This is like a never-ending game, but just if you sort of understand how the operating system on a server works, it's really messy. There's a kernel, then there is the user space, then there is many threads in the application, and each fighting for time to execute on the CPU. You have to protect your so-called hot path, the one that can't really wait on anything. No locks, no context switches, no nothing. Just pure execution. You go down to like CPU clock cycles and investigate what thread happened in each time. You start to really change the way you code. It starts to become really weird. For example, you have like JSON parsing mechanism. Normally you would just use some sort of a JSON parsing library for that. You can't here because it's too slow. You have to like pick the bytes out of the JSON individually and do like weird stuff that normally nobody does because you're not in the millisecond sort of space anymore. Probably you are around the microsecond space. The best in the business are in the nanosecond space. So yeah, you have to like design your own operating systems and go really like Nazi about it. So it's very hard to do it right, but it's like ongoing fight. Yeah, as I mentioned, avoid public internet. Not exactly. There is a hot path internet and the slow internet. You have to design the strategy such that you can send some information with the slow internet, but the really important information must go through the fast internet and how to split the messaging such that you can send the least amount of information with the fast connection because it's really expensive to have those channels, those ones, like London, Tokyo, and Frankfurt, London, or New York, Tokyo, and things like that. Yeah, and adverse selection is the interesting word used pretty much only in trading, which means that always somebody is faster than you, always somebody is smarter than you, and it's really hard to. It's really first of all, it's really hard to measure it, really hard to see it. You have to design like crazy monitoring systems to see how much like 1 extra millisecond would earn you, how much 1 extra microsecond would earn you, and how much effort you want to put in to decreasing the latency even further. But yeah, that's a job that must be done as you scale. And finally, I want to say that also the business model changes. Yeah, as you can see here, written down. At the beginning and back in 2017 and 2018, it was like a math problem. It was like a coding competition kind of thing. It's like, okay, let's get our hands dirty. Let's see how good of an engineer I am, how good I can code. It's like going to a hackathon. It's like a game. But then you realize that you're getting successful, and then that becomes a business. Then you start to trade with your own money, but you start to hire people. You start to like have a business. You start to have accountants, finance director, and things like that. And then it becomes a real business. Then you realize that, oh geez, you're trading and earning money, but it turns out that exchanges want you to trade in them. They are actually paying you to trade in those exchanges. They need the liquidity. They need like the action in the, let's say, 40th biggest exchange. They really need some action going on. So they are paying you as a big player to be there. We literally have like negative trading fees now, which means that as we trade, we get paid for it. And as you even scale even further, you realize that your infrastructure has become so good that you can actually start selling it. If it's good for all your 100 different strategies, well, it's also good for external strategies. Just figure out a way how to sell it. Figure out a way how to attract external trading teams or external partners that would allow them to trade with your strategy. Pretty much, you open your infrastructure to the public. Now you have clients again. Now it becomes a B2C again, B2B again, and but it's much easier because you have the whole machinery going. So this is the stage we are currently at. We have opened OTC desk to attract like banks and remittance services and other companies to exchange from fiats to crypto, from crypto to other crypto, from stable coins to other stable coins, and so on. And finally, the holy grail what we are looking at is pretty much changing the world's finance. We are about to challenge SWIFT networks. If we can trade fiat to crypto and then crypto to another fiat, well, effectively what happens, we traded from one fiat to another fiat. That is what SWIFT does. That is transferring value, transferring money from one country to another country. You can do it with crypto very well, and we are at the forefront of doing that. We are one of the best in trading all sorts of emerging market fiat currencies. We're in 40 different places. And okay, my time is up. So yeah, that's sort of the business model evolution. As you scale, it changes who you are and changes how you think. And I cannot not show this slide. So yeah, we are changing the world. If you want to do it as well, here's the QR code. We're hiring. Thank you.